Yes, yes, I can hear you.
Okay, so I said our last section, we looked into
Hmm.
sections. We looked into how we could do internal trading, that is intraday trading. And then I gave you insights, brief insights into New York section, London section, Nissan section, and how those operate
Hmm.
within the market. All right.
Right.
So before we get back to that, because we haven't looked into properly into how we could use those, because I have to give you insights into kill zones. So there are certain levels or certain areas around those sections which I showed you that are called kill zones. So they are called kill zones because they are intersections between two sections. For example, the intersection between London and New York section, like if you recall in the video, I pointed out some areas where we noticed multiple change of character happening, right? Like when price was moving from London section to New York section, you know? Or should we look into that formally for today, or should we do the top-down analysis stuff? Which would you prefer? Hello, can you hear me? Hello.
Hello.
Yeah, sorry, I think the network got disconnected again. I said, should we go into sections and continue from where we stopped last um, week about Asian section and kill zones, or should we just, continue with top-down analysis? Hello? Hello? Hello, can you hear me?
Oh, yes. Yeah, I can hear you now. Yeah, I could not hear for the last 1 minute.
Sorry about that. But it's audible now, right?
It's audible now.
Sorry, I had to check. Let me check if my network, the Wi-Fi is connected to make sure it's not from there.
O- Okay, sure.
I said, for today's section, do you think we should continue with what we were discussing last week about sections and kill zones, or should we go into top-down analysis and I give insight into liquidity?
Um, doesn't really matter to me. Because for me, I don't know if I can like trade in like specific kill zones based on like because I'm working, I don't have time to trade in those ones. So I'm sort of more like I guess, a swing trader. So it's gonna be like a high time frame to lower time frame, like that analysis. Probably we can touch on
Yeah.
that, and
So
this
let's
topic we
go
can leave
into
for the future.
looking at price action from areas of interest and trade
Okay.
opportunities that are actually visible that we could call
Hmm.
opportunities from price actions. Okay, how about that? Looking
Okay.
at it from a top-down
Sure.
analysis perspective.
Okay. Sounds good. Yeah.
Okay, so I'll give you some few examples. I'll show you for what we have here on NAS 100. This is NAS 100. So this is a bullish price action.
Hmm.
Okay, there
Hmm.
was a retracement here. So let's look at the possible scenario of an entry from this retracement. If that was possible, let's see if there is any area of interest there that could
Hmm.
be of an entry. And then if we
Hmm.
zoom in here, I would say we could identify this. We could see the demand zone, right? So you see the rally, the base, and then the rally, right? So this is a demand zone. Remember what I told you about
Right.
supply and demand?
Yes.
This would also be another block. So that would be an obstacle against the trend. but it's a counter structure. Remember, I also taught you about the phases of market structure, like how we have the counter structure and the structure in the direction of the trend. So whenever you're looking at price
Right.
action or whenever you're looking to take an entry, it's always advisable that you look at both perspective because, there's every tendency that if price is going to reverse, it's going to reverse from, the counter structure. But if it doesn't reverse,
Mm-hmm.
then that counter structure is going to be used as liquidity, just like what happened over here. Okay. So
Yeah.
what could we see as an inducement? So the word inducement, let's look at that. Do you have any idea about what an inducement is, or should I just break it down?
It's just like it's like I know it's like a fake move, I guess. It's not, it's just before the point of interest.
No, no, no.
That's
It's
all I
not. It's
know.
not
Market
fake.
again come.
It's not
Okay.
fake to say because every action that is shown on price action is actually a reaction. So nothing is
Mm-hmm.
printed out of assumption or by mistake. It's all intentional. Let's put it that way. So
Okay.
the price action is an inducement is the word means to attract. Just like a company making an advertisement to attract customers. That is, they are doing that to induce those customers to those particular, offers. So they would have flyers and they would have the flyers designed a certain way to attract, the customers. So that is an inducement. So basically, an inducement is a price
Mm-hmm.
action that is made to attract retail trader. An action that is probably made to trap or to, let's say, induce traders. So it's always on terms of market structure because I told you market structure is the movement of the trend. So anything or any
Mm-hmm.
concept that is used in the market has to be explainable on market structure because market structure is just the structure of the trend. Okay.
Mm-hmm.
So on market structure, an inducement would be the internal structure that forms a trend. So when we have something like this, okay, are you with me?
Yeah, I'm here.
All right, so let's say we have something like this. So we know this is a low, right? This is a high,
Right.
and this was another low. So
Mm-hmm.
this low was created in the process of this range being formed, okay?
Mm-hmm.
So, but which low would you say cleared out this high? Would you say it was this low, or would you say it was this low? Would it be A
The
or would it be B? This would be A and this would be B. Which would you say cleared out this high?
I think it would be A.
Yeah, because A would be the former structure, after the, retracement. Remember, I said something about premium and discounts too, right? So,
Right.
so price is moving. This is a range. So when price moves
Mm-hmm.
to form a new range, if you measure the range from the high, swing low to the swing high, with a certain tool, you can get the equilibrium level. So above is premium when price is high, and when price is low, we call it discount. Okay, so that is basically the structure, the breakdown of a particular range. So this would be price retracing into discount of this particular range and then making this price action over here. So this would be the official
Mm-hmm.
swing low that was formed after this swing high was formed. So this low cleared out this high, which if this low had initially cleared out this low, right? This low here, this would have been a change of character, right?
Right.
But it didn't. So what happened was that it cleared out this one, which formed the break of structure, right? So technically, this was the
Right.
low that broke this high, not this one. So what does this
Yeah.
become?
Inducement.
You know, and it's also the internal structure that formed this particular range that broke this high. So it's the internal structure that formed the range that broke this high. So when next price is coming back down, let's say like what I mentioned about premium and discount. Now we mentioned the premium and discount. Let's measure the premium and discount of this range. Okay. So this would be discount and this would be premium. Do you know this tool on TradingView?
Yeah, yeah, I know that. Yes.
Okay, so let me just zoom in so you see it properly. So mine just only have the number one, the five, and the zero. So that gives me the top, the middle, and the bottom. Every other thing is removed. So it's the gain box.
Okay.
And then it helps you gives you a style like this. Then you add the background if you want the color in it, you know.
Okay.
So you could set that on yours when you're free or something.
Yeah.
So when we're expecting price to retrace back down, which low do you think would hold to form the new lower high for this price action to continue? Do you think price would do this? Okay.
Mhm.
Or do you think, sorry, or do you think price would do this? Which
Yeah,
one do you
this
think
look.
is a typical smart money concept pattern? Hello, are you with me?
This one here.
Right? So why do you think so this would be the inducement, right? Because
Correct.
this would be a point that a lot of traders would be looking to buy from. Now, is it possible that this could
Mm.
happen? 100%. This is also very, very possible. And this is also something that is called the breaker block pattern. It looks like what is called the breaker block. I'll teach you that in further episodes. I don't want us to, have too many topics to discuss about so you don't get confused. So I'll just focus on the topics we have for now, and then we'll just look for examples of this scenario on price action. Okay? Are you with me?
Yeah, yeah, I'm here.
Okay, so this would be a typical smart money concept, and that's what we have here as well. So as you can see, this would be
Mm.
what you would identify as the inducement, right? And price cleared that perfectly into this uh demand zone. So if this is this visible on the daily time frame, it's what we now call a confirmation. This is what we call a confirmation entry because it's something that has criteria on multiple time frames, right?
Mhm. Right.
So we see this would be the low that had the inducement. This would be the counter POI, right? So you could see the
Mhm.
reaction here, but price failed to
Yeah.
break this low. So the price action was still bullish. Okay, if you look at it
Right.
from this point, this is how you know when price is changing character. You have to pay attention to the price action. As you can see, this was the low that was created after the first mitigation, right? Then what did price do? Price went
Right.
back up, afraid to break that low. So which means this price
Mhm.
action is still bullish and then did this.
Yeah.
So there was no break of structure or change of character. So this is a bullish price action. And then there would be no confirmation from this point for an entry. But on this scenario, okay, now on 2 episodes away, we talked about the criteria for an entry. Do you remember? Do you recall when I spoke about I would take an entry from a higher time frame area of interest if the entry matches my amount of pips if I'm able to take that rather than just refining to a lower time frame and then missing out on a trade. Remember when I said something like that?
Yeah, yeah. So yeah, right.
So now we have a scenario like that here, because if you look at this price action, if you if I was on this trade, I would place my stop loss below this, and if my account is able to allow me do this, I will definitely do this rather than just refining to a lower time frame area of interest, which would rather be around this point here. And that would have led to you missing out on this trade. you know, because if you refine
Mm,
that to the 1 hour time frame, first of all, don't forget this is technical analysis, so nothing is certain. So because you identify an area of interest this clean and simple as you can see, doesn't mean it's always going to be this clean and simple. So if we had refined down to this point, that would have also been a snipe entry, okay?
mm,
But there was also every possibility that you might have missed that trade, you know? But this is a good
right.
example. This is a good example.
Mm,
Now, would you call this, let me show you a different scenario. Would you call this an
mm.
inducement for this area of interest and a reason to sell from here?
But overall, the market structure is bullish, so like it may still work out, but you don't want to, go against the trend. That's
Exactly.
like a risky
That's the
trade,
perfect answer.
right?
Because first of all, observe the structure. As you can see over here, price only stopped out this low. So there was no break of structure. So if this was an inducement, what would it be inducing? You know, because the structure is clearly bullish and it hasn't changed pattern yet. Okay, right?
Right.
So if there's no change of character, there's no reason for you to pay attention to the inducement because there's every tendency that it might get stopped out or it might not even hold. Let me show you an example on an internal structure, something that we would say a lower time frame price action. So if you look at this point here, if you look at this point here, right, you'd see this would be considered a demand zone. Okay, you could see the rally, the base, and then the drop. So this would be considered a
Yeah.
demand zone, or we could say another block. Okay, this would be considered a break of structure, right? So would this be considered an inducement? Are you with me? Hello?
Hello. I could not hear you. Sorry for last
So I
15
said,
more
would this be
seconds.
considered an inducement? If this is considered a break of structure, would you consider this an inducement to sell from this zone? Hmm?
It's like in the context of very like small, short time frame, it could be considered inducement, but go over against the higher time frame, you're going against the trend basically. But yeah, given like, there is a break of structure on the 1 hour, it's sort of like thinking market is going back up. It's like an inducement there, right? So,
Let's go to a lower time frame so we could see that. Because it's better we do things like this because that's the only way you get the concept properly clear. If you look at
hmm
price action here, okay,
hmm
so this would be let's put it like this, right? So you can see how
yeah,
precise that is if we refer to that zone. But when you look at this
right.
zone here, this also had an area of interest and this also had a mitigation. But what's the difference
hmm
between this zone and this zone? One would be
hmm
this zone is at a swing point. Okay.
hmm
If you look at market structure from here, you will see that this is a swing point. Okay.
Yeah,
Secondly, would be that this zone was formed as a result of an inducement because we had a swing low at this point here. Okay. So this was a
right.
swing low. And what did price do? Price mitigated that swing low, which a lot of traders, let's say support and resistance traders, will see this as support, and then would buy from these points.
hmm
So orders were bought from these points. And then price liquidated those traders here, right? So
Right.
this entire price action was formed as a result of an inducement. So traders was
Mm.
being induced to buy. So liquidity was dropped at this high, which makes this an inducement
Mm.
as well. I don't know if you see the logic
Yeah.
behind that.
Yeah, it makes sense. Yeah.
So if you look at the price action, it's more like this. while this high was created as a result of a retracement on this range. So if you look at this range here, okay,
Mm-hmm.
price created this point as a result of a retracement into this range. How do I know that? All you have to do is look at premium and discount of this range,
Right.
right? So the break of structure was at this point. Okay. So once price broke structure, price kept creating lower lows and lower highs. So the price action was still bearish. So the first official inducement, so sorry, retracement that formed a new swing point was this high. Okay. So, and as you can see, this high cleared out internal highs of this previous range,
Mm-hmm.
So it's possible price could also retrace to mitigate this as well. So this was an area of interest as well, right? But what did price do? Price just stopped out everyone
Right.
who placed a stop loss above this high and then
Mm-hmm.
dropped. Okay. While this
Right.
high, on the other hand, let me take everything out. So while this high, on the other hand, is actually an internal high. Sorry, one, two. Is actually an internal high on this range.
Mm-hmm.
You see, it formed part of this
Right.
range, while this position is actually a swing point. So whenever you're stuck in a position where you have to choose which POI to wait for a reaction from, this is always going to be more reliable
Mm-hmm.
than this one. Okay? Because this would be an inducement. This would be
Okay.
an inducement to the one above. This will be an inducement to the one above. And the only way you can confirm that this would hold is if this manage to break structure. Okay. Remember what I did earlier, how I mapped out market structure like this, trying to understand what was going on. So as you can see here, price failed to
Mm-hmm.
break structure. So this is also a low that was created in the process of creating this range. So it's still a bullish market structure. So even if you were in a sell, once you saw a price action like this, it's most likely you have to just close. It's better to close at break even than, to wait for something like this to happen. Or you could just place your stop loss above this high and then wait for price to drop before you close out this position, being strategic. I don't know if you get what I mean. So did you hear what I said?
Not for last 15 seconds.
But did you get the breakdown I just did on that part?
I saw that. Yeah. That's understand. Yeah. I understand that.
Okay, so if we look at price action, you saw the example of how price mitigated this area of interest,
Mm-hmm.
okay? While clearing
Yeah.
out this liquidity. This is a 4-hour area of interest with an inducement. While on the lower time frame, we
Mm-hmm.
looked at areas of interest around here and how price made a sweep of liquidity, clearing out this low and then mitigating. On a different topic, on a different video, I'm going to teach you about how to get an entry from a rejection candle because this is a rejection candle as price mitigated um, this area of interest. So this candle is a rejection candle. So there's a particular strategy I was taught about how to place an entry at the 50% of your rejection candle, which is this.
Mm-hmm.
You see? So whenever you have an area of interest, it's a different pattern of a confirmation. So whenever you have an area of interest and then price does something like this, mitigates that zone, and then before the candle closes, it rejects back into bullish. This is a pin bar, bullish pin bar. So this is a rejection from this point. So price closed above this, engulfing this previous candle. So this becomes a confirmation candle. The candle is actually called an FU candle because it took out money from all of these points, F everybody up, and then reversed back in just a single candle. So this would be a confirmation candle. So when you see a candle like this, sometimes you just mark out the 50%,
Mm-hmm.
you know, and then you take an entry from. that because most likely price would retrace back to mitigate the 50%. Because on the lower time frame, this is an entire price action. And then, price would definitely come return back to discount, of that range.
Right.
Let me show you what I mean. So
Mm.
you see how price came back down.
Right.
So you see the high over here. On the 2 hour time frame, that should look like okay. So you see how price engulfed this previous candle and then just came back
Hmm.
down, mitigate this point and went back up. So this is a rejection. Okay. So if you keep going lower, it just looks like a price action where price just will return back into the 50%.
Hmm.
You see?
Right.
So everything, and that's why I said if your pattern doesn't fit into market structure, you have a problem. As you can see here, so what did price do? Break of structure. So this will be a change of character, right? So price broke above this high and then
Hmm.
returned back to 50%, created a new market structure and went bullish. You see, never really broke after then. It stayed bullish. And that's how a change of character. So it started from this point. So this was the rejection that happened, you know, with this price action
Hmm.
here. So the higher time frame is just a single candle. So that's where the concept of an FU candle comes from. Have you ever heard of that? Maybe mentioned in the
Right.
past, an FU candle.